Hello, family. My name is Ron. I'm an insurance broker, financial professional who assists individuals and families with life insurance, accidental supplemental coverage, critical care protection, dental, plus vision coverage. I help individuals make the correct decisions regarding estate planning, generational wealth, and planning for the future, which can be uncertain and unfortunate. With proper planning and the knowledge provided by a financial professional, your future financial positioning and final expense goals should be simple and aligned with your wishes and family security. Regarding this segment, I will explain the value of life insurance and its importance regarding the death benefit. I will also discuss the opportunities for generational wealth, financial freedom, and estate planning. So let's get started. Life Insurance 101. The two most important benefits of life insurance are, number one, protection against the financial consequences of death, and number two, living benefits of life insurance. The financial consequences of death can be very devastating. Nothing can replace a spouse, parent, child, brother, or sister. The practical financial consequences of death are another matter. Without life insurance, surviving dependents can suffer extreme financial hardships as a result of an individual's death. There exists a possible loss of income, as well as a number of sudden expenses that may occur as a result of death. Final expenses. We frequently hear about the high charges of living, but dying can be costly as well. Let's look at some of the common expenses that must be met when a person passes. Number one, funeral expenses. Funeral costs can vary depending upon the type of service, geographical location, and other factors. According to the National Funeral Directors Association, the average cost of a funeral will approximately be $7,000 and up. In addition to the cost of the funeral, there are burial expenses, florist fees, and prepaid expenses for future care of the burial site. Remember, funeral expenses will increase over time due to inflation. Number two, attorney and administration fees. Executive fees and fees for the attorney will make up most of this cost. Other expenses may include court or probate costs, the cost of appraising the estate property, the cost of insuring the estate while it's open, maintenance or repairing the estate, specifically if it's to be sold, the cost of defending the will if it should be contested, auctioneer fees, and so on. The larger and more complex a person's holdings, the larger the administration expenses will be. Even modest estates may incur significant administration expenses. Death taxes, federal and state, yet are another cost. Such taxes are especially important in large, unplanned or poorly planned states. Federal state taxes are progressive. The larger the state, the higher the tax. It can add up to 55% or more. This tax generally must be paid cash within 9 months of death. Number three, debts. This could be another major cost. It includes automobile loans, credit cards, promissory notes, bank loans, and final expenses of the last illness. For example, medical expenses that are not covered by Medicare or health insurance. Accrued taxes may also be considered debts. This will include unpaid income taxes, property taxes, and many other expenses that were incurred but not paid. Now, let's talk about income needs and what life insurance can assist with. Number one, dependency period. These are the funds that need to be available during the time when it may be hard for a surviving spouse to work due to children. With the high cost of childcare, the surviving spouse may not be able to make enough money to enable them to work if they have to pay childcare expenses. Number two, survivor's blackout period. One important fact you need to be aware of, the term referred to as widow's blackout period. This is the period of time where Social Security has stopped paying the surviving spouse because there are no dependent children. The widow will no longer receive benefits from Social Security until age 60. Number three, survivor's retirement. Providing funds for the surviving spouse retirement is an important consideration, especially if the spouse does not already have their own retirement plan. Number four, mortgage and rent payments. Mortgage and rent payments may still be required for the surviving spouse or dependent. Number five, college education and tuition. College education and tuition may also be funded by life insurance per the death of the insured or by using a loan or withdrawal from the policy. Number 6, key person coverage, business expense, or startup money. A life insurance policy can cover a key person's part owner in the business to cover final expense arrangements and pay out death benefits for business expenses due to a key person's death. Life insurance can also fund a business venture or used for business startup capital, as loans and withdrawals are available within the policy, mostly after the free look period, depending upon your company and policy details. I hope you learn more about the importance of life insurance and why it's important to plan for the future properly. Contact me for consultation and coverage per my email. Until next time, blessings to you and yours, and I love you for whom you are. Godspeed.